All right, welcome to the Compound and Friends, and we have a very special friend here today, Ben Carlson. And Ben
You look so cute.
He looks adorable. Ben is an official member of the Compound. You're not even an end friend. You're part of the Compound. So we have no friends today, I guess. And Duncan's an official member of the Compound too.
The survey says that people are losing their friends. So
fair. All right. So this is I think going to be a day that we remember for a long time, because Robinhood, one of the most talked about topics in our industry, maybe in the whole country over the last year or so, finally went public. And it was not particularly well received, but it's also not a bloodbath. They priced at the lower end of the range, $38. They opened it around $12.30. It immediately touched $40 and then has been falling ever since. But again, not terrible, $34.82. If you're Snoop Dogg and you own the stock at 20 cents, you're fine. If you're an early investor in any of the venture rounds, you're fine. If you're an insider, you feel okay.
What if you're that guy?
If you're Ben Carlson, I don't know. So first of all, you got shares in Robinhood pre-IPO. How did that happen? How did that work?
This was an experiment for me.
You don't do this.
I did this. Yeah, never. I did this for the show.
Okay. Thank you. We appreciate it.
So they had this new IPO access thing. You put in that you want to get some of their shares,
right? And
they give you a price range. So this range was 38 to 42. Really bad sign when they said all your shares got filled at 38.
Never want to hear that.
Because it also gave you a 20% buffer. If it went 20% above or below those, then well, at least above, then you wouldn't get it because it wouldn't want to give you too high of a price.
So when you got your shares, do you find out immediately, or does the stock open and then they say, oh, you're in?
I put it in 2 days ago, and then this morning it said you had allocated. And I was going to wimp out yesterday and cancel. I'm like, I don't do this stuff. Whatever. It's my Robinhood account. I'm having fun. And Michael said, no, keep it in for the content.
Keep it in. Wait, so did you get you got the full allocation?
The full allocation at the low end of the range. So that's why I'm like, okay, this thing is not going to trade well today. Okay. There's no way if the retail is getting at the lower end of the range that it's going to do well.
Now, they told their users who got shares in the IPO that if they want to be in contention to get shares in future IPOs, they have to hold the stock and not sell it. Is that your plan? Do you want to do more of this?
Wait, for how long? For how long?
No, my plan was to sell this after a 30% pop.
Yeah, that didn't work out.
Well, no, here's the this was an evidence-based approach on my part.
Take the L.
No, I'm taking. I trust me. I'm never gonna financially recover from this. To quote the Tiger King guy. So historically, you get like a 30% pop on average first day of IPO, and then over the next 3 to 5 years, you underperform by 30%, and it levels out basically.
Right.
That's what it's like. That's where all the return comes from the IPO. Is you get in at the IPO price, and then it pops, and then you sell.
How about this? Another piece of historical data that is now rendered completely useless.
Well, they interviewed the guy from NASDAQ today and asked him if he's like disappointed or whatever. I guess whoever's in charge of opening the deal, and he was basically like, a third of these deals opened down. It doesn't mean anything. And you can point to Facebook and say, all right, that was one of the most disastrous IPOs ever. And then you made, I don't know, 8x on your money or something if you lived through it. So I don't.
100 million shares traded today of Robinhood, by the way.
Do you think they missed their window for if they did this 3 months ago?
February.
Would have gotten way more.
For sure.
February.
Yeah.
But they weren't ready. They still had fines they had to settle. Like, they were not in a position to do this until now. I think they weren't sleeping on it. But yeah, like, this would have been way more well received.
So 100 million shares for Robinhood today. SPY did 42 million. Apple did 85 million by comparison. So tons of volume. Closing market cap of 29 billion.
It's big.
It's not that big. Coinbase.
Come on.
Coinbase 61 billion. Not only are you wrong, Ben, you're so wrong.
Wrong about what?
Ben said, go ahead. What did you say?
I said Robinhood is going to be bigger than Coinbase.
You did?
And
well, not today.
So
but it might be.
At the IPO, and I'm pretty sure he did one of these.
I said
he pounded the table. He told me to timestamp it, which I did.
6 months ago, probably. I said Robinhood's going to be bigger than Coinbase.
6 months ago?
Yeah.
I probably would have said the same.
I do think there's some similarities between the companies. So if you think about like what Wall Street's going to want from this company, their earnings or revenue is going to be all over the place, right? It's going to be really great one quarter and crappy the next, and that's the same thing with Coinbase, though, right? They're going to be kind of similar companies that they're going to be really volatile.
It's trading volumes, and trading volumes are not going to be consistent from one quarter to the next. But that is 75% of their revenue.
What do we think that the street is going to judge them on?
User growth.
User growth.
Memes.
So, well, but I do think, because I think that I think that the street will look past their revenue growth. If it's like a quiet quarter, I think it's gonna be all about user
The
growth.
street is not going to give them credit for a quarter where like options trading was big because that's expected. And they don't do that
and
for
it's-
other brokerage firms that are publicly
And
traded.
it's transitory.
It's always, well, it really is like literally
So
transitory.
they're gonna look for user growth.
It's a business of ups and downs, but if they can go from 22 million to 30 million, then definitely this thing could add 10 billion in market.
But
Okay,
I
so-
do think that 30 billion, like that's reasonable. They have that
30 million people.
30 billion market cap.
Well, it's there right now.
I'm saying no, but that can grow. Like that is reasonable. I think they can grow that.
So Ben's IPO shares, buy, sell, hold.
I would hold it if I were you. If you're already in the hole 8%, what do you have to lose?
I'm out.
Besides the other 100%.
I'd be out. I'd be out because you did this as a goof. Like you're not looking like. Do you really want to be an investor in Robinhood? I mean, it's 100 shares. Who cares? But I'd be out.
I would not be out because I think there's going to be a slew of very good research reports from the street and high price targets because a lot of important firms have a lot on the line here, and I feel like a lot of people that have been waiting to sell it got a chance to sell it today.
How's this?
Yeah, there had to be a lot of people who said, I'm selling immediately when I can.
Robinhood.
So that happened to 100 million shares. Do we think there's a lot more of that?
So this is a Michael point I'm stealing.
Wait, before you steal my point. Thank you, by the way. Robinhood is going to trade like Twitter. It's going to be a constant investor headache over the next 5 years.
Oh, I could picture that. Like
That's
in other
possible.
words, every time it looks like it's about to break out,
It's
there's-
going to gap down 14%.
Well, one of the things that I just would normally say with something like this is like, let's say you wanted to be an investor in it. You're probably not that price sensitive anyway. So why wouldn't you wait for the first report as a public company? Let's say you have to buy it at 40. That's the price you pay. Like, let's just see if they can even do this right and not come out of the gates missing earnings expectations.
Who are the buyers? Like obviously ARC F. Like I forget who said that. Kathy Wood's going to buy this. Who else? Who are the natural buyers? For a stock like this?
I'm pretty sure she'll come out of the woodwork at some point.
Well, there's got to be a ton of
and
new
own it.
ETFs this is going to fit the bill for, right? Any sort
Yeah,
of
but they're not that big.
niche. Well, all the thematic ETFs are going to want to own Robinhood,
fintech,
right?
the fintech ETFs, but they're not that big. Probably ARC. I don't know the main fund, but like
Well, after today, it's going to
It'll
be
be
all the deep value funds.
Right, exactly. Yeah, Berkshire's taking a 10% stake. ARC
Berkshire will
F
be
and RK. Ben, alley-oop me. What's
All
my
right.
take?
So the VCs pouring into this lately because they wanted to get in before the IPO, they're stealing the first day pop.
yeah. Well, that's been going on for a while now.
So Ben and I spoke about it this morning, and Matt Levine wrote about it as well. That when I said historical data was rendered useless, if these companies are going to be bringing shares to retail and there's more demand, like or more supply, I guess, pre-IPO, then shouldn't the pop be compressed? Isn't that like a reasonable conclusion?
Yes, because the people that are price insensitive and just want in, if they can get in prior to the opening tick, and they don't care what you're selling it to them at, that is the pop.
Now the question is, how big is this group? Like, why is Robinhood going to get a big piece of future IPOs? It might not be enough to move the needle.
They said their customers, this is the Wall Street Journal, said their customers got 20 to 25% of this one. They thought could go up to 35%. So maybe their customers didn't want it as much as they thought.
But put Robinhood to the side.
Yeah, like in other words, how does Robinhood muscle its way into to the table for a deal that Goldman or J.P. Morgan or Morgan Stanley or lead underwriting? They could come to the table and say, "Hey guys, we're democratizing finance."
No, they could say, "Listen, we've got Muppets." Not to be too rude, but like our clients will pay anything.
Yeah, I don't know if they would say that because somebody will write that down. I don't think it's a good idea. This is a Bloomberg article. Largest decline for an IPO of its size since Uber. Things didn't work out so terribly for Uber. It's above its IPO price. But here's what Bloomberg says. Shares in the broker behind the meme stock revolution fell as much as 12% below the IPO price, puts the stock in the running to rank as the worst debut on record among U.S. firms that raised as much cash as Robinhood or more.
Big deal.
What are those?
There's a list of 10.
What do they raise? $2 billion?
Yeah, that's true. The list is pretty small because IPOs are getting bigger these days.
What? I mean, the Airbnb IPO day was pretty good, I think. Wasn't great. Coinbase was a horror show because somebody paid 400 something on the opening tick. So that one couldn't. I don't know. This just doesn't seem that catastrophic.
No,
to me.
not at all.
Doesn't seem that bad.
So this is a win for Eugene Fama.
Why?
because it didn't have a 30% pop and it didn't fall 30%. It's a relatively efficient price.
Oh, the market was efficient in opening it where it opened it?
Ish.
Do you think that they have a whole slew of announcements they can't wait to make that are going to get people excited? Like maybe we're going to add sports gambling to the platform.
I feel like
we're going to sell weed.
I don't think they
know.
have anything in their chamber. I feel like they show their hand.
Really?
They probably have a lot of fines coming up too, but
I have no evidence for that, but like,
what do you think about the news yesterday that they're being investigated because the CEO never bothered getting a Series 7?
I don't understand how that came down to the last day. That's like when my
public information.
why does
all
he
this
need
time.
it? Why
But
does he need it though?
it's 18 hours before the IPO.
He needs it if he's substantially involved in the day-to-day operations on the brokerage side.
Is he?
doesn't. Yeah. Well, I'm telling you what lawyers who commented in the articles about this said. So I'm not a lawyer, obviously. I know a lot of people sometimes think that I am. I'm really not. But the lawyers are like, it depends on his level of involvement in the brokerage side, like whether or not he has to be licensed.
How come when we're talking about law, somebody always has to say I'm not a lawyer? Like if you're talking about running, you don't say like I'm not an athlete.
Well, because I'm saying like a legal
no,
opinion.
I'm not saying you specifically. I'm just saying everyone. We all say I'm not a lawyer. No,
Because you know why? It would almost be like giving medical advice and someone's like, what medical school did you go to? Oh, I didn't. Like it sounds as stupid, I guess. So maybe that's why people just preemptively do that. That's why I do that. As a broker, I don't think that's a big issue, but I do agree that a lot of the stuff with payment for order flow is going to get a second look, and it might not be able to do it as profitably as they were able to do it in 2020.
I think that ship sailed. I think we're going back.
I don't think we're going back, but I think will be more heavily regulated. Isn't that like a consensus take? Like, can you possibly imagine another free for all?
Regulated what? So they need more disclosure. What are they going to do?
No, there's tons of disclosure. Nobody reads disclosure. They might make it less profitable by just forcing.
How about this?
Forcing best execution.
Give users the option to route it to the New York Stock Exchange and say, "Do you want to pay $4.95 for this trade?"
Yeah, I agree. Nobody would.
Nobody.
Right.
Who cares?
I don't think investors care. I absolutely don't.
So this whole crusade about like people getting pissed at Robinhood for like not giving. Honestly, if I get a penny filled higher, I don't care.
No, you don't even know, and that's why I think it's probably not going to go back. But I still think it's going to be something that they'll probably be listening to people complaining about for a long time. And by people, I mean politicians. Are we done on Robinhood? Is there anything else that we want to say? Is there anything else that we were supposed to say on this topic? What do you think?
Well, I mean, my children can't go to college now. Other than that, we're good.
Well, you should. I have an idea. I got it. I'm not a lawyer, but short 100 shares.
Don't be a fucking dick about it.
Short 100.
Because now I'm going to preface every statement I make with what I'm not.
Short 100 shares just to be hedged.
Okay.
So lock in the loss, but don't sell.
Okay. I'm not an archer who lives in Sherwood Forest, but I would just say that if you had to give a letter grade to Robinhood's debut as a publicly traded company,
C+,
or B minus.
That's
Because in the end, this is still a $30 billion company with a CEO who's not registered to be in the business that literally just settled one of the largest fines ever with its regulator.
Not so bad.
And they still managed to come public with a debut where 100 million shares change hands. So I don't think you can call this a loss.
No way.
For anyone except for Ben. To be quite frank. All right, let's keep it moving. Where are we going next, Mike?
We are going to technology stocks.
Oh yeah, we have to do this.
Listen, I know like we talk so much about these names. How can we not? It's the whole market.
It's the whole market. It's almost all that matters right now, and it won't always be that way. So let me just set this up. This is Felix Salmon at Axios. As recently as 2017, Apple, Microsoft, Alphabet, and Google combined were worth less than $2 trillion.
Wait, as of when?
17.
Because now they're 10.
Hold on. Today, Apple and Microsoft are both worth more than that alone.
Wow.
And the 5 biggest tech giants are collectively worth $9.3 trillion. The 4 companies reporting this week, and we didn't even get Amazon, so far generated an astonishing $250 billion in profit over the last 12 months. 10 years ago, when they all mostly looked identical to how they look today, their profits were less than $58 billion. Right. So these companies generated an excess $200 billion in profit over the last decade, above and beyond where they were.
Above and beyond their market cap. Is that what they're saying?
No.
Okay.
Like their profits 10 years ago, the 4 companies that reported this week, were 58 billion. Now they're 250 billion. So is that a quintuple?
So it's almost like the stock market is reflecting reality of their businesses.
If we would have modeled this out in a spreadsheet 10 years ago,
Nobody would have believed you.
no way. Said this is the growth, this is what it's going to go to, these are the market caps. No way that could ever happen.
Well, they would have said it's going to be the biggest investment bubble in history.
No, you know what? It would have been like, yeah, okay, so everybody in the world's gonna have 7 iPhones. That's what would have had to happen for Apple
So
to justify
this is
numbers.
from Ned Davis. They show the market cap of the fan mag stocks is now bigger than all value sectors combined. So that's energy, materials, industrials, and financials. These 6 stocks are bigger than all those combined.
Yeah.
Justified.
So then you look, but then you go to the reports and you ask yourself, where should these stocks trade? These are companies doing like $100 billion in revenue,
And growing 20%.
growing
Or
faster
more.
than 20%, with 50%, 43% gross margins
It's
for
absurd.
Apple.
It's absurd.
How could that even exist?
So here's where investors potentially get in trouble, like trying to get the second tier of these ones and assuming they can do this. Are these ones just complete outliers? And then,
NVIDIA came along. They weren't part of FANG 5 years ago. I think they took Netflix's place.
but do you think any of these next level ones?
No.
Yes.
No.
Can
no.
they? I'm saying,
No,
can
hold on.
they do this?
I don't think so.
Can they get this? Can we say, okay, well, who's going to be the next $1 trillion company?
Salesforce is in the fucking Dow. We never talk about it. Oracle is on fire because they got very serious about the cloud, and they already have the biggest installed base
Hold
of
on,
large
but
corporations.
you're answering a different question. I think, Ben, what is your question?
These can be new fangs.
I'm saying that we have this second tier, and people are looking at like $100 billion companies now, saying, okay, this one's going to be $1 trillion company too. Is that really going to happen? We're going to have all these other 5 or 10 more companies get to that level?
Yes. All right. Let me back up. What do you think Adobe's market cap is right now? Take a guess.
300.
Don't cheat. 300 billion. It's not that far off. It's,
Am I right?
It's where, I mean, that's where these stocks were 3 years ago in
Okay,
2018.
that doesn't seem that, but that's a 3x from here. That's a big return.
We just saw Apple add $800 billion
Yeah, but-
in market cap in a year.
Yeah, but I don't think these are. No, yeah, justified.
All right. What do you think PayPal's market cap is?
I know it's around the same, like 250,
I think it's
300.
fucking bigger than JP Morgan.
Is it? It's
I think
400.
But
so.
I'm saying for a company that size to have another 3x return,
I don't see it.
I'm saying if that happens,
If you look at the total addressable market and you see like PayPal's a good example. I don't know what percentage of like every transaction on earth they have.
Well, what
I can't
time-
imagine it's more than 1%.
Time frame. Are you talking in the next decade or the
wait,
next?
I'm not a total addressable market, but how big is this shit going to get, right? Like,
Well, if they continue to eat into the GDP of all of these countries,
I'm just saying if this happens, then we could have another 6 or
Bubble.
7 years of really decent to good gains
The
in the
reason
market.
why I don't think that PayPal and Adobe and Salesforce can be in the same category, and I'm not saying that you're saying they can, is because Facebook, Google, Amazon, Apple, Microsoft are all a huge part of our daily lives.
Microsoft 7 years ago was irrelevant. They completely reinvented it overnight.
Okay, fine. Take Microsoft out of the equation.
It's the second biggest company.
Fine. Apple, Amazon, Facebook, Google are all in our lives
Stipulated.
every single day.
Stipulated. Is Venmo not?
No.
Really?
No, I use it once a month.
Okay, Salesforce is in our business's daily life.
Okay.
All right,
And that's why it's trading where it is.
Alphabet, YouTube revenues,
I want to talk about that.
$7 billion in the quarter, up over 80% year over year, which is ludicrous.
So listen to this. So YouTube is about to pass Netflix
Yeah,
in revenue.
yeah.
And I think one of the takeaways from this is how profitable advertising is versus the subscription model is fantastic,
Well,
obviously.
YouTube has both now.
But look at YouTube.
Yeah. Well, let me say this. On the call, which I listen to on the Quarter app, which I love,
Oh, they do have the subscription. I forgot about that.
they have YouTube TV
Yeah.
and they have YouTube Premium, whatever. They made the case on the conference call that there are consumers, like millions of consumers, for whom there literally is no other way for an advertiser to reach them but YouTube. They're not listening to the radio. They don't have They don't have traditional television. They don't obviously read anything in print. Like if you want to reach that consumer, it's YouTube or nothing.
I hope.
And I believe them.
I can't wait till the time where they can do the Olympics on YouTube and it's on demand, so I don't have to look for it on
Do your
Peacock.
kids watch? Do your kids have YouTube on TVs in the house anywhere?
They have, but I mean, their TVs are their iPads.
So my daughter has YouTube and Netflix and does not know how to access FiOS cable.
Right.
She
My
doesn't
kids-
know what channel any show is on. If it's not on Netflix, she doesn't care about it. And most of the time, she'd rather just let the YouTube algorithm continue to play Drake videos.
My
like on a
4-year-olds
loop.
ask, "What is this?" when a commercial comes on the regular TV. They don't know
Yeah.
because YouTube's. So you mentioned too, like back in the day, what is everyone going to buy 7 iPads or iPhones?
Right.
So I have an iPad from 2014 probably still, but iPad revenue last quarter was 7.4 billion.
Yeah.
If you annualize that and it's close to 30, I know it doesn't work like that
Wait,
because
last quarter?
yeah, 7.4 billion in that quarterly report.
Just selling screens.
So let's annualize that. I know it doesn't work that smoothly. It's whatever, 30 billion. Netflix's trailing 12 months revenue is 28 billion. So the iPad is bringing in probably more revenue than Netflix.
Did you see
That's
the app?
insane.
Did you see the Apple Watch numbers? They have iPhone users coming in droves to the stores to test drive the watches and buy them. It's like unexpectedly becoming as hot as the AirPods. Like the watch is becoming a very big product unto
Every one of
itself.
those, I said, I'm never going. Why would I want this?
Dude,
I have it all now.
I have one on each wrist just to be safe.
Listen, they're going to sell a ton of watches. They've been selling a ton of AirPods. Every one of these products they sell locks you in deeper to that ecosystem. And I think the only bear case you can make on the stock is that they might fumble the ball with an iPhone launch, or somebody might politically get very involved in the iOS take rate for the App Store.
Mhm.
And they might just say, this is an illegal monopoly. But that kind of stuff takes years to play out. I don't see it as like a near-term threat to the stock. And that's why it seems effortlessly to just be adding tens of billions of dollars to its valuation. And I almost want it to stop and calm down because it's become so extreme. I don't know.
I feel like a lot of this move happened in the past 3 weeks. Like we were talking from over the last year that Apple and Amazon, they're just going sideways. And when it moves, it moves.
When they break out, they go. All right. Anything worth saying on any of these that we haven't covered? I think we talked a lot about this. I don't know. I'm astonished. I wonder if they'll get to a third of the market. They're about 26%.
It's funny too. You could have in September, Apple fell 20%, and then in March it fell 18%. So like these stocks still get hammered occasionally, out of nowhere, and every time they come back.
One more thing I want to add, and I wish I had the numbers in front of me, but if they keep growing at the rate that they're growing and the market keeps growing at the rate that the market is growing, I think in like 7 years, these companies are going to be like 57% of the market. And in 10 years, you're going to be 75% of the market. So I don't want to say something has to give because if we've learned anything, nothing has to give.
Yeah.
But I kind of
Didn't
feel like
one of you guys do the post about the last time we saw this much concentration in the U.S. stock market?
Well, back in the
it
60s,
was like AT&T and GE.
the top 10 were 50 or 60%.
So this has happened.
Yes, with the conglomerate era.
I think AT&T and GE were like 16% of the S&P.
Now that didn't end well, but it never ends well. So that's
But if they're at 35% in a few years, that wouldn't shock you.
Not at all.
it wouldn't shock me, but I really feel that there's going to be a next generation behind them that become bigger. It doesn't mean that these companies will have to slow down. I just can't picture it being 5 stocks forever.
But is that good? Like, does this not stifle innovation, like, and competition?
I don't know because you could make the argument that Apple has plenty of competition. It's just overseas. They compete with Android for a user base, and they compete on devices everywhere in China, in Europe. Like it's not like they're the only phone company. They're just very, very sticky with the people that start buying their products. They don't leave.
And by the way, everyone has a friend who says, Android phones are actually better than iPhones. I'm going to show you why. And you go,
Dude.
guess what? I'm not including on my text anymore because your text box is green.
Yeah, no, I don't do the green text.
I
assume it's.
And we're going to get emails from people who say, Android is better. And I'll tell you why.
Star Belly Snitches, the Dr. Seuss book?
Okay.
Like one group has star bellies, and that's like the person with the green on their phone.
Contrarian for the sake of being contrarian.
It's just like the green. They're like pariahs.
Well, once they made these phones a subscription product through the carrier versus you have to give us $700. I mean, now they're $1,200. But I think that allowed the ecosystem to get even bigger because people are innumerate and they're like, oh, this I could afford this.
Well, you know what could fuel more growth is the buy now, pay later. If you could get an Apple phone and pay $60 a month to them, like interest free or whatever, pay a little bit of interest, I feel like that
is what they already have that.
I know. I'm saying they're going to swim downstream as well. Get more people.
I'll give you one more quick bear case. China has become very important to Apple, and the sands are shifting beneath everybody's feet. And I highly doubt that this economic Cold War can go much further without somebody in Beijing saying, you know how we really with people? Apple's 10% of their stock market. Let's make it harder for them to sell blank.
Yeah, we don't care. We just crashed our own stock.
They just crashed their own markets.
Remember 2013, like the bear case was for Apple, it's over-owned, overloved. Everybody who wants to buy Apple owns Apple.
Yo, the bear case was that it's index money pushing it up. and it's just like people pouring money into ETFs, and that's why Apple's going up. No, maybe it's because
Earnings per share.
Maybe it's because Apple has $250 billion to do buybacks with, as far as the eye can see.